In this video, I'm going to talk about why I invested $100,000 in the stock market to cover my healthcare costs in retirement. If you're new to my channel, I am Tanya Taylor, founder and CEO of Grow Your Wealth TV. My channel is about saving, demolishing debt, and investing your way to a worry-free retirement. Please subscribe below and hit the bell so that you can be notified when I post new videos on Fridays and on Sundays. Okay, so let's dive right in and talk about why I'm on this journey. I was doing some research and I learned from a study by Fidelity, and I talk about it in the key retirement pitfalls video here, about how Fidelity did a study and it showed that a couple that retires at 67 would need $245,000 to pay for healthcare costs. And that kind of freaked me out. So it got me doing some more research. And as I did more research, I noticed that Fidelity actually had an updated study, and it showed that the couple would need $295,000 if they retired in 2020 in order to cover their healthcare costs. So then I was looking at some other studies, and there was one from HealthView Services Financial, which talked about a 65-year-old couple needing $387,000 in retirement for healthcare costs. Those numbers were so alarming that they immediately spurred me into action. So I had a retirement account, which I've had it for a number of years. It was just one of those IRAs which I had initially opened when I was able to get a tax deduction. And then once I got phased out of that, I just never really put much in it. Every couple of years, I would put some money in it, and it was at about $16,000. Then I had a retirement plan, which I had rolled over, which I started that retirement plan in my early 20s, and then I added another one onto it. And it was around $92,000. I had not been actively managing it. When I read this study, what I decided to do was that I was going to take that $92,000 and I was going to put it with this $16,000 that I had and really start actively investing it and earmarking it for my healthcare savings account so that it's not commingled with my retirement plan, because we already have long-term care. So we knew that we were okay with long-term care, but never in my wildest imagination had I realized that I would have to be paying so much for healthcare costs. I didn't realize the gap was so large. I segregated it from my other retirement plan because I already have my retirement number. I want to be able to see how I'm doing with this healthcare cost. I'm only actively investing in the stock market. I have bought some ETFs as well. And when I started out, I did this at the beginning of August. I said I was going to leave $20,000 and leave it more for liquidity because the stock market is so uncertain right now. And I figure if there is a big drop in the stock market, I want to have that money to be able to buy some additional stocks. I don't have $20,000 in cash anymore. I have around $10,000, and I plan to leave it at the $10,000 for at least another couple months and see what happens with the stock market. I like to have liquidity in my portfolio, so any one of my stock portfolios, there's always some cash laying around for some good discounted stock. So I have $70,000, which I have invested in high quality stocks that I would invest in my regular portfolio, and stocks that I know that I can hold for the long term and I don't have to worry. Then I have the $10,000 in cash, which I'm leaving there in case there's a blip in the stock market so I could get some good quality stocks on sale. And then I decided to take $20,000 of that and I started to invest in companies that I typically would not invest in. And part of my reason for that strategy is that I know that I'm not going to need this money for at least another 20 years or so. So I feel like I have time on my side in that way. So some of the investments that I have made are in like ETFs related to Bitcoin and gold, also emerging companies that are still in like very infant stage but could potentially grow to be like a Tesla or an Amazon. So I've taken that $20,000 and spread it across. I built my little portfolio where if these companies take off, they could really help my portfolio. But I also call this my risky money, so that I know that if I were to lose out on some of these investments, it's not going to be devastating because I've already kind of earmarked it and said within this portfolio of the $20,000, there may be some winners and there may be some losers, and I'm okay with that. So, this is a quick walkthrough of my portfolio. Right now, it's $112,000 rounded up. Before the market crashed, it was at $18,000. It's been steadily growing because the market has been up. Then we get to the market crash and it drops down to $16,000. However, the market did recover. And so by the time we got to August, it was back up to $22,000. So between the beginning of March and the end of July, I had gained about $4,000 because if you remember, the market was doing really well. And that's when I decided to transfer that $92,000 into my account. And at that point in time, my account went up to $115,000 rounded up. And it's been doing pretty well since then. If you will notice, it went up as high as $121,000 in September 2nd. And of course, I was like, yay. But I also was realistic, and I know that there is a lot of volatility in the market. And I think there will be a lot of volatility at least through the end of the election. And that's why I wanted to make sure that I have some cash on hand. So then the market started to go crazy the past couple days, and that's when it's been falling since then. So it went from 121 and right now it is at 111. So essentially since the September 2nd, I have lost $10,000 in this account. However, in reality, my account is only truly down $3,000 from the time I transferred the money in. And I'm not at all worried about it. I actually have been able to pick up some more stocks this week when the market went down. So yeah, so that's where we are right now. So what am I invested in? So I am invested in technology, cloud storage, healthcare, consumer products, industrial, railways, activewear, and quite a few other industries as well. Apple and Tesla, like Teladoc, Gildan Activewear, CNI Railways. Then I have the cash that I mentioned for market volatility. I've actually used up some of that cash this week. And then a basket that's made up of a plethora of different industries, different stocks, different ETF. So I have emerging market, I have ETF, Bitcoin ETF, fintech ETF, biotech ETFs. Then I bought some high yield bonds because the return was so phenomenal, and international stocks, international ETFs, and emerging industries like 5G, driverless cars. I did stocks for in other countries, like you think about China, you think about India, you think about Taiwan. So I did purchase some individual stocks for those in countries as well as the ETFs, because those areas are a little bit more risky and the companies are a little bit more risky. So I felt that my investment in ETF was a little bit more comfortable than my investment outright in the stock. And yeah, so that's my portfolio. I am going to continue to monitor it, but my goal is to have enough for my healthcare when I retire. I am not investing anymore in this account because I have to save for my children's college education as well. So I want to keep funding their college education. For me, that's really critical. So I've been funding my children's college account since before they were born. And I need to continue to fund it based on the timeline and the goals that I set for myself so that I can hit that goal. So I know that I'm not going to be able to put any more money into this healthcare account. So it's just really managing it so that I could get to the number that I would like to get to when I retire. What I say to someone who does not have like the $100,000 to invest, I would say that you still want to be very aware of these numbers that are out there. Know that you can truly be devastated by healthcare costs, and plan for having something earmarked for healthcare needs as you get older. If you could afford $1,000, put it in. If you can't afford $1,000 and you could afford $100, put it in. It's really recognizing that you're going to need to do this starting doing this and then adding on to it. I don't know if this $100,000 will get me to, I'm thinking I need $500,000. So this may not get me to $500,000. So I will need to figure out how I would supplement that additional cost. Another thing is that if I end up not needing this money for healthcare, it's in an IRA, so I'll be able to use it just as part of my regular retirement fund, or I can earmark it and donate it to my favorite charity, as well as leave it to my children or any other organization that I see fit to leave it to. I do hope you found this video helpful and that it gave you reasons to think about including healthcare costs in your retirement plan if that's something that you had not been thinking about. Please share my content, like and subscribe, and I will see you in the next video.